Good morning, everyone. If you can hear me, I would appreciate if you type in a chat box check mark that you hear me. Welcome to Trading Options with Options at tradeactive.com. My name is Josip Kosik. Today is last trading day of September. Good morning, Mark. Good to see you. And I like to show you the disclaimer here. We're not financial advisors. We do not provide any financial advice. This is strictly for educational purposes. Take a moment to read the disclaimer if you even need to stop it. And we are ready to roll. So we're gonna show you the agenda for today, and it's going to be quite exciting. Unlike what we have done before, we are going to actually start with trade review because I've gotten the email, you place these trades, but you don't kind of follow through. And we have two trades that we have placed, and I'm going to take a time before I even look at the current stock market condition, what those trades have done. So September 21st was a Fed day trade that we placed, and then September 16th was a SPY trade. And we are going to do that first, and we are going to use the website on which I always post that information. So this is tradingwithufos.com, unfilledorders.com/Josip. And when you scroll down here, you would see the trade. So over here on this particular day, which was September 20th, day before the Fed day, we have entertained the possibility of the long iron condor. And this long iron condor was risking basically 370 to possibly make $1.30 of the profit. And it all depended where the strike prices close, on that particular thing. So if you look at the S&P here being at 38.45 was put side. And I'm going to now bring in here a document that I have created here to kind of help to enlighten this. So here it is. S&P closed on the September 21st, which is that Fed day, exactly at 37.89. That's mean it has dropped significantly. And of course, over here, I'm providing this link. Actually, what I'm going to do right now, I'm going to copy this link and put it in the chat box. So all of you present can actually use that link and kind of know where to find us. And then you would just need to look for that specific day, which was the 21st. So the 21st on a CBOE website, it gives you the index settlement. It tells you exactly it closed. But what I like to do, I like to take a snapshot of that same day at the close and have a FinViz kind of explanation, because over here it's just a dry data. It just shows me where we close. And as you can see, going into the Fed day, price did nothing, and then it went down. It zigzagged to the upside, actually took out the high of the day. And then when Jerome Powell got in the microphone and started speaking, it just completely has collapsed. So what does that mean? Well, that actually means that in our account, let me bring the Thinkorswim account and go back to that particular day, you would see that we have priced for $370. So just circle that particular thing. I remember prior to the Fed day, I have reset the account. This is, by the way, paper trading account. It says right here, paper trading account. I've reset it at $5,000, and we have placed that long iron condor, not knowing which way it's going to go, and we received the payment of the 370. So one more time, this is all on this worksheet right here, which is under the trading with unfilledorders.com/Josip. Trade for 370 with the possibility of the making the $130 as long as the price action either goes up or down. And as you have seen over here, we have increased that account from the amount of $5,000 by not even having any exits to the 5,191. If you rewatch that particular lesson, I took like maybe 45 minutes walking through it, and in the last 15 minutes, let me just change the color to, let's say, blue. I said I'm going to repeat the same thing on a Russell 2000. And on the Russell 2000, I have placed $430 with the possibility of making only $70, right? Because both of these spreads were $5 spreads. So on a $5 spread of this S&P, as I mentioned to you just a second ago, I was able to make 130. And then when you look in the 130 on the top of the 5,000, it's supposed to read 5,130. Then why did this jump up to 5,191? Because also the Russell has made me. So this 430 became a $500. That's mean I made an additional $70. And when you subtract these small fees out of it, that becomes $5,191. So both of these long conduct trades worked out. And whoever sent me that email saying like, oh, but you never go over the exits, like I'm doing it right now. So that's the first thing that I was about to show you. The second thing that I want to show you here is the SPY trade. So the SPY trade was a trade that we also placed. Let me just bring up the exact days so there's no confusion here. And what I'm doing again, I'm bringing up again the tradingwithufos.com, and you would just need to scroll down over here and locate the SPY trade. So basically what we did in SPY trade, if you can see here, we purchased the bear put spread, and this bear put spread has costed us $1.53. But I was like, why would I pay that $1.53 when I'm bearish in the market, when I can have a bear call actually do that activity for me? So what I'm doing here is just kind of explaining to you very simply that my bear call spread, and let me just now bring the document here so you guys can see it. My bear put spread. Okay, so here it is. So here's the bear put spread that I just show you that we enter for $1.53. Okay, so in that particular account, there was a $10,000, right? It was a $10,000, right? We did the activity in such a way that we went ahead and did this trade as a one big ticket, and one big ticket was on September 16. We did this whole thing, and this was decreasing the value mostly because of the commission from a 10,000 to 995. Now let me just now explain this to you, what is going on here. So just one second, I need to zoom out here. We have entered the bear put for a $1.53 debit, and when you sell at that level, when you buy at that level, you expect to close it for higher. And when we close this, we got a 283. Where's the 283? That's when we exited, and we exited, it was just yesterday when it come down and hit the target. So here it is, a proof from the statement that that entry that we got over here one more time at $1.53 was exited for 283. Well, now that just covers the situation of the bear put. And bear put is actually a debit trade, and that debit trade had made the difference of the 130. Well, the next question that pops up is then what about the bear call spread? The bear call spread was sold, and these are the strike prices. Look at it. The strike price was 400 and 405, right? And obviously, if I would show you where the FinViz is showing that the S&P is right now, SPY, I should say, not the S&P. SPY is right now, it's sitting all the way down at the 364. So when you know that it's sitting at 364 and we sold as October 404 or 5 call, then obviously that cannot be credit of the $1.51. Well, it wasn't $1.51 because when we exited, and that was exited at the same time virtually at the open yesterday, right? At the open yesterday or 2 days ago, it was bought back for 25 cents. So let's now go over the bear call. Bear call was sold here, sold for the credit of the $1.51, and then it was bought back for a debit of the 25 cents. So that gives me the $1.26 profit on the bear call side. Could I have left it there? Yeah, I could, but then that still it's tying up the difference of the two, and the difference of the two is actually the whole $5. So this is a $500 that is tied up because I received $151, when in reality, what I can do is simply give them back a quarter at 25 cents, right? You know, which gets multiplied by 100, which is $25. But then I free that $500 and I made 126. And like, oh, Josip talking too much too this morning. You know, what's the bottom line? When you add this difference on the bear call spread of 126 plus the 130, that comes up to 256. And that's exactly what has happened over here. When you're looking here, I purposely reset that account before that particular trade, which we took on September 16 to $10,000. I kept the account clean. I did not trade in between the sessions. As you can see right here, I did not place any trade. And when it came down and it hit the target, it exited me. And the bottom line is that that account of the $10,000 has gone up to $10,250. Why would be $250? Because remember the commissions are eating up some of my profits. So this is now pure mathematical explanation what has happened. Commission per contract is a 65. For 2 contracts, it's $1.30. As you can see right here, one more time, this was a trade that was placed that originally was financing this 153 debit was a finance with the 151, right? So we are shy about the 2 pennies or $2 plus this whole commission. When everything worked out, things turned out the way they did. So anyways, having said that, I have now completed the trade review of the Fed day, you know, and as I said, Fed day was quite exciting day. As you can see over here, it went down, it went up, but what do we do in that case? We placed a long iron condor and we said we don't care if it's going to close up, we don't care if it's going to close down, we just care that we do not lose $370 on it. And we didn't lose $370 on it, because what ended up happening, on the top of that $370, we have made 130, and our account went from a 5,000 to the 5,000, and this, which wasn't all from that 130 on the SPY, S&P 500 cash. It was also, and let me just change this color to blue because of the RUT. Now notice the RUT was risking the same $500, but it ended up making only what? $70, because when you subtract from a 500, 430, obviously RUT was not as good trade. Well, in reality, I said it's not as good trade, but when you actually divide the profit that we have gotten, which was a $70 profit, and I'm getting the $70 by 500 minus 430 by the investment of the 430, and that's actually in a day. That, ladies and gentlemen, is a 16%. I don't think there's any bank that would give you 16% in one day. So, having said that, I like to now proceed to our platform so we can review the big picture, what the market is doing. So I spent about 15 minutes satisfying the question of the student that has emailed to me, are you placing the trade but you're not following up? I'm following it up, and I'm not going to spend more than 15 minutes talking about the two trades that we went at. I want to look at more trades that we can place now, and in order to place those trades now, we're going to start with the big picture. This is a 9-day exponential moving average, and we've been consistently below it. In fact, for the last exactly 13 days. So we're bound to have a bounce. And as I'm speaking to you, as you can see, S&P 500 is having just 1 second. I don't know why is this not giving to me what I want. It's having a green day. It's going up. Straight line up, and it's not just S&P, it's also the Nasdaq and it's Dow Jones. It's end of the quarter, and that's kind of normal. Now the question becomes, are we going to lift and take out the high of yesterday? Well, that remains to be seen. Right now we have potential to do that. Now let's look at the bigger picture, and what I mean by the bigger picture is, what are we doing on the monthly? And I quickly go through these, looking where are we in relationship to the low that took place back in February. Well, we no longer need to look at that low because that's not the lowest of the lows. Now we actually have a new low, and this new low right here was the June low. So if you're looking right here, what has happened to the June low? Exactly yesterday. For the first time, we have come down and we have tested that June low yesterday. And we are now, even with this pop that we have in the market, still below that low. Still below that low, right? So just be aware of it. This is what is currently taking place on the Dow. Why don't we now look at what is happening with S&P 500? So September, going back to August, going back to July, moving this because it's no longer relevant. This is a February 24th low, and placing it down here. And you would see we came and we touched it virtually to the penny, and now we are hovering over it. So as long as we don't take out the June lows, we don't need to worry about how much lower the price action is going to go, because the price action could go way, 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 way lower if we lose the June low. But unless we lose the June low, we're not going there. And remember, it took a long time to resolve this issue of the February 24th low, 1, 2, 3 months, right? So over here, we're just about the same amount of time, 1, 2, 3 on a fourth month. But as of now, this thing is holding. Now, we're not done with our analysis. We just looked at the Dow Jones. We just looked at the S&P 500, like I like to call the Dow Jones grandpa, because it's been around since like invention of the Wall Street. And S&P 500 is a newer one, but newest of them all is actually Nasdaq. Now Nasdaq is not really a market; it's more like a sector. And also that February 24th was significant. So what I'm doing right now, moving that February 24th low to the June low, and we came yesterday and we touched it and we bounced it. And I can't say that we bounced it with a vengeance, but we definitely did not go lower because there were buy orders by the institutions placed at that level that have pushed us up. We're almost done with our analysis, and before we jump into searching for a new trades, I want to finish up with the Russell 2000. I'm using a proxy for the Russell 2000, which is Hi, Jeff. It's good to see you. It's IWM. So IWM is a proxy for tracking the Russell 2000, and I'm moving the February low to the June low and showing you the same thing. So the bottom line, what I'm trying to point out to you this morning, if we are not going lower, there's only one conclusion. We can either go sideways or we could go up. Having said that, I would like to now jump into considering the trade on Russell and considering the trade on S&P 500. Just like I did in the past when it was a Fed day, I spent first time on S&P 500 and then I jump in the RUT. Now I'm going to mix it up a little bit. I'm going to first look at the RUT trade, and then I'm going to jump into the S&P at the end. Now, expect that the RUT trade is not going to be as good, and I'm emphasizing that it's not going to be as good in the terms of the liquidity. So I'm looking at the one-day trade, the trade that could be profitable by the end of the day. And what I'm pointing out to you that this is a September and it's a quarterly and it's also end of the month. That just coincidentally happens at the same time. I'm going to use the green here so it can be a little bit more obvious what I'm pointing out to you. All these other ones do not concern me. I'm teaching the lesson on September 30th and I want to look at if I can place a bull put spread that is far out of the money, because obviously RUT has bounced 31 points and it's going up. We don't know where it's going to close. We really don't know where it's going to close. But the fact is that market is going up. Right now you can say it's getting toppy, it's true, but as long as this line is intact on all three of them, market is going where? Up. Now, I would like to place on a Russell 2000 a kind of bull put spread for small little profit that by the next lesson that I do, you will know whether or not we won or not. So how do we do this? When I open it up, I want you to look at not the call side, but the put side. So we're not looking here on a call side, irrelevant to us. We're looking right here on the pull side. And one of the things that I want to point out, and let me just change this color into, let's say, blue, is that there's a really very, very little bit of activity taking place. So what I'm pointing out to you, if I'm selling this for 30 cents and buying this for 30 cents, then that just doesn't make sense. This right here would not make sense. How about if I look at another level? Another level is that I'm selling the 1670 and then I'm receiving the 65 cents and I'm giving them 50 cents. That is a lousy 15 cents for what? For a $5 spread? It doesn't make sense to do it. So then really when you look at it, only place where it makes sense to do it is the 1680 and the 1670. Now, be aware of it. I don't like this because it's a $10 spread. This is a $10 spread that we are risking to make only this much. What's that? That is the functionality of the quarterly, because on the regular options, as you can see over here, these are the regular weekly options. We do have a $5 increments, $5 increments. So rather than risking $1,000 in each trade, it's only $500. But when you come on a quarterly, they treat this almost identical as NDX. And in NDX, just a little detour for 1 second. You just don't have a $5 increments, except around the what? Except around the quarters. So here's a 25, you have it. Then here's a quarter again, you have it. And then the next one is again quarter, and so on and so forth, right? So you would notice that the Russell on the quarterly is being treated that way. But because we are in a paper trading account, I do want to fire this trade in. So I'm considering right now placing this trade right here. So be aware of it, that we are currently sitting at 1706. So I have a possibility of doing the 1680 and 1670 for the small little credit of 65 cents while I'm listing 935. That's a possibility, eh? So let me just write down here. So 1680 and 1670, these are the puts for 65 cents, risking $9.35. Second choice is if I go higher and I do the 1690 and then I sell the 1680 put for, and I'll be able to price it and show it to you, because you need to keep in mind where are we currently. If you're currently at the 1706 and me selling the 1690, I'm telling to the market maker I'm willing to buy Russell 2000 not at the current price of the 1706, but on decent $16 discount today, and you better pay me. And what are they supposed to pay me for my obligation, for my willingness to commit that capital? So let's just delete this because I don't like this 65 cents risking the 935. I'm going to just move the mouse higher here, and I'm going to sell this vertical for $1.27. And the reason why I'm selling for $1.27 because I'm receiving $8.73. So I'm sending it in. I doubt they're gonna fill me at $1.27. I really doubt. But you know what? I got the price improvement, and I really like when I get the price improvement, because the price improvement means, in this particular case, that I have gotten $1.45. So if I have gotten $1.45 over here, okay, there's something here odd. I'm showing all the accounts. I got filled on two of them. Doesn't matter. So now I have two of them. This is paper trading account, but I want to one more time repeat to you what really happened. I'm risking here. I'm risking right here in amount of. Let me just zoom in on specifically what I'm talking about. I'm risking $855 to make 145. Let's just stick this into the Word document, and I can then discuss this better. So, was it better for me to risk 935, or was it better for me to risk to gain $1.45 and then risking 145? Well, obviously this is the less of the risk. Now again, as I disclaim it to you, this is educational purposes only. This is for you to learn how this whole thing works, right? So we have now this particular trade, and I will now move on to the next one. The next one that I'm going to move on, I expect to be even better, because I'm going to be doing the S&P 500. So I'm doing the S&P 500. Now, it's essential to look at the chart of the S&P 500 prior to placing the trade. So don't mix looking at the SPY with the looking at the SPX. On a SPY, obviously we have red UFOs, but I'm more concerned about finding the green UFOs. And where would be the green UFOs? Well, they would need to be somewhere below us. Now, on this particular chart of the S&P 500, which is a caret sign SPX, I see that I have a UFOs at the 3658. 3658. Let's say 3660. Okay, on a SPX. On a SPX. Oops, I can do that. I should move this down here and talk about the SPX. Okay, so we have a demand zone at 3660. 3660 is what I'm looking right here that we have. So now that I know that, let's see if I can go into the, and let's pick a different account now. I'm gonna pick IRA. Yeah, so and this is a IRA account in which I was showing you that I had a SPY trade that made me money. So now in one account I have a RUT, in another account I'm gonna have an XPX trade. So SPX trades now is going to be oh, this is so tight. If you're at the 36.66, that's only $6 higher. I do not like that trade. I really don't like, because if you're currently sitting here at this number of the beast, that's only $6 higher. So I really don't like this UFO at the top part. So I would probably need to look at the bottom of this UFO. So the bottom part is here, 36.29. Let's add additional few dollars and pick the 36.25. 36.25. Now that is more like it, because I'm giving myself a decent $41 of the breathing room or cushion to be profitable. Because I don't want to really get the sun. I want this thing to go higher and higher and higher. So if I want this thing to go higher and higher and higher, then I shouldn't be placing it somewhere down here. So 36.25 would be approximately in this area. So if we are going to be wrong, the market will need to come down and revisit. How about if I have that trade versus a super uber conservative trade? So what do I mean by that? Okay, super uber conservative trade, and let me now start maybe making it side by side, and then I'm going to ask you if you would like to choose a choice A or a choice B. So choice B is going to be below the LOD, and a LOD stands for a low of the day. Okay, so that's the LOD. So we can pick whatever the UFO is, and that would be the choice A. So choice A said below the lowest point of the green UFO zone. Okay, and that happened to be this particular level, right? That's happened to be this particular level. Now on other one, the way how you do this without complicating too much, you just zoom in right on this circle. What's the low? That. So what we are now looking at, really, it's a decent $15 difference, right? So if this is a 36.15, I would feel more comfortable placing a bull put spread that is gonna be selling to open 36.15, and then of course protecting myself with the lower one, and that's the put side. And now the question is, what is that credit gonna be? Now that credit is gonna be definitely less than the credit for A, but for credit for the A is going to be very similar, because we are selling, and I can just copy this so I save the time typing here, 36.25, and a lower strike price in that case would be, of course, 20, and that's going to be also a put, and that also is going to give me a credit that is going to be greater than. Now, let me tell you, my bottom line is, if I'm placing this for $5, I would like to get at least 50 cents. 50 cents on a $5, that's a 10%. I'll then feel comfortable that I actually like that trade. So let's start with this more dangerous trade, because really I forgot to put here the key words. And the key words that I want to like to use is, this is a conservative trade, and this one is more dangerous, but I'm gonna just call moderate, because everything exists in comparison with something else. Now, this is my preference. My preference is to do this one, but anyway, we have 25 minutes. We can do both of them and we can entertain them. So what do I need to do? Well, I need to find more strike prices because obviously I don't have enough here. So let's use the option chain here on SPX, and I would need to alter this particular situation by going into the bullish, and that's called a bull put spread. And when I go edit, I'm now editing it to today's expiry, which is September 30th. Now that I have given you all the numbers, I just want to say to you, psychologically, I like to have a sell on the top and buy on the bottom. So the one that UFOs were showing us is a 36.25 with the 36.20, with the 36.20. So here's the 36.20. When I click OK, it spits out that possibly I can get 60 cents. Let me just now get the most important thing here. I'm really just extracting the most crucial information. So if I'm getting the 60 cents on this one, what do you think I'm only gonna get on the other one? More or less? So I'm gonna take a moment here to sip the water. Feel free to type it in. Because think about it, this is more conservative because it's lower by an additional 5 points. So do you think they're gonna give me more or they're gonna give me less? Yeah, you're right. They're gonna give me less. So let's now verify that. Mark, you just got 50 cents for that one. That's wonderful. You know what? Maybe that's what I should do too, rather than here debating if this, then that. Why don't we fire the trade in on a more conservative of the two? So I would probably need to give myself more strike prices here. Let's ask for 20. Okay, so I should ask for 22. Then I can see both of them there. Okay, so look at it here. This is the one that I'm looking at here. 330 versus the 295. 330 is the one that is being sold. 295 is my return to them. So without any hesitation, let's see if he can get the 50 cents that Mark was able to get. 50 cents credit, firing it in. Bingo! Mark, we're on the same page. We're on the same page. I got 50. Okay? I got 50. And now in a different account, so I'm switching from my IRA into that original account, margin account. I want to place the same trade, but I want to place the same trade a little bit higher and see how much am I going to get on this one. Now, be aware of it. This is not my preference. Oh, it says 75. It can say 75, but let's see if it fills me 75. It filled me at 80. It filled me at 80. Okay, so now let's now revisit this on a chart. So when I revisit this on the chart, I'm going to just float this for a second and move it away just to kind of discuss this thing. So the one that we had right here, it's below the second UFO, and we're looking at the 15-minute chart. Be aware, if we're looking at the 15-minute chart, we have a gap. There's a possibility that we might go up and fill this gap. There's a lot of things out there that could happen today. Okay, right now we're taking a breather, but you should not panic because in the past we have taken a breather and then it was bought up. We're taking a breather and it has bought up. As long as we don't lose the low, let's say, of this particular line that I'm drawing here, market should go up. If we ended up losing Dow, that level, that's mean we went into negative territory. And when we go into the negative territory, then that's a problem, because obviously this dotted line represents what? Previous day. So if this is a previous day, be aware of it that we do not want to go down in this area. That's all negative territory. Now, Even if we come on a NASDAQ to that level, look where the negative territory is, way below, way below. So we're not trading. We're not trading Dow. We're not even trading NASDAQ. We're trading the Russell. And the Russell currently is, let me just check here, see exactly what the Russell is doing here. And for Russell, I'm going to use the IWM, and it's a nice proxy. So Nasdaq is up the most; it's up 1%. S&P is up 0.5%, and obviously Grandpa is tagging along 0.2. But look at the beast. The beast is up almost 2%. It has already taken out the high, and that's the first trade that we placed in. So obviously we're good with trading the rattle, and we're good with trading actually the S&P as well. So without any hesitation, we need to now start recording the information that we have on the more conservative of the two trades. So on the more conservative of the two trades, so this is a one that is moderate. This is a one that is more conservative. And when you look at it right here, this is supposed to, I'm going to for a moment get rid of the open interest. And the reason why I want to get rid of the open interest, because at this point, I want to replace it with the intrinsic value. When I replace it with intrinsic value, you're going to get the zeros. We are so far removed from where the current price action is. So when you're looking right here, 36.50, okay, I guess we did pull back significantly from the 36.66 that originally we were at. So we're hitting originally, we went as high as, that's kind of interesting. While I was talking, I didn't even notice that we went as high as a 36.71. And right now we're sitting at the 36.53. So that's almost like a $20 pullback during this breather that's taking place. But be aware of it. We are all the way down here at this level. We're all the way down at this level. So S&P would need to drop additional, 40 points before our trade is threatened. And that's why I like this conservative trade. And I'm going to just grab this here so I can have that information when I'm filling up that thing that I'm going to post at a website that I usually post Excel sheet and everything. So I'm just grabbing this, putting it inside the Word document. So although this was quoting me, then whatever it was quoting me, it's irrelevant. That information is at this point irrelevant, because that was just I don't want to say guess, because it wasn't really a guess. It was accurate information at the time, but because we are trading the live markets, we need to edit this with the correct information. So we have traded the 36.15, and we bought even more conservative 36.10, and we got filled for 50 cents as an aggregate. But I do want to type in that we received a 360. That's $360. I love that amount, but I hate when I need to give back 310 back. So that 310 back, it leaves me with only profit of the, and if you can look at right here, of the $50. So I'm getting here the profit of the $50. Let me just take a snapshot of this, and I want you to be aware of it, that we are actually risking $450 to make this. So that's kind of expensive proposition when you really think about it. And I'm saying it's expensive proposition for a simple reason that we have a other choice that we can entertain as well. This other choice is not going to be risking $450. It's going to be risking less. So let's grab the numbers for that one. So I'm switching here accounts. So now I have more of them, but if I want to keep it simple in this area, I just type in SPX, and then it gets rid of my rut trade. So now I got rid of the rut trade. I have here information on this. Now I'm going to show you what we can do to enhance this, because I really like this conservative trade that the market took, but I want to enhance it a little bit, So let me just now dump this on the top here. This is my moderate trade. Moderate trade took in 50. So let's go back in one more time. I'm going to alter this one. Well, actually, let me just take a snapshot one more here. So I have everything in order. So I don't need to go back and forth, back and forth, back and forth too many times. This is a explanation of this particular trade that we took as a more conservative. So now when I go back over here and alter it to the original one, which was a 25 and a 20, I do need the information. How much did we got filled? So this was a 5 and this is a 420. That's easy. 5 and 420. Okay, so let's now get to the bottom line of it. The bottom line of this is that I can enhance my performance. And for those of you present, if you can type in a chat box, how do you think I can enhance the thing while I'm getting this ready? I would really appreciate it, because I do want you to be involved here and type in your input. How do you think I can enhance my performance of this particular beast? There is a way to enhance it, and we are going to entertain this in 30 seconds. I just want to be done with all this statistical information that gets appreciated once when I post, but if I don't post, then it doesn't get appreciated. So I want to make sure that you're aware of it, that on this moderate trade, we're risking $420. So look at here, $420 is being risked. $420 is being risked right here, which in my opinion, it's not worth it, for a simple reason that I got the $30 more. But if this thing comes down violently, like it could, hint, 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 what has happened here in the last exactly 1 hour of trades, exactly last hour of the trade, what has happened here? This is between a 3 and 4. It came down significantly. So in that case, if I had this one that got me $80 versus this one having additional, and this is, by the way, it's not additional 5 points. And why do I say it's not additional 5 points? For simple reason, it's a 10 points. Well, now I just lost you. You were doing fine up to this point. I understood everything you said, and now you're switching. Okay, be aware of it. These are all $5 spreads. Difference between this and this is $5. But let me now color this so you'll understand. I'm not going to color it. I'm just going to make it bold. This is a 25 and this is a 15. I would rather have a $10 of additional cushion or a protection in case in the last hour, end of the quarter, for whatever reason, nobody wants to hold something in the weekend and they start selling like maniacs, than to have this lousy extra 30 cents. So between two trades, I think the one that Mark picked was better. Yeah, we could buy the call. That's a very valid strategy, and I would do that if I were trading the SPY. But right now, I'm not doing the SPY, and I want to revisit one more time here what the market is doing in terms of the pullback. Did it stop, or is it going up? Okay, there it is, ladies and gentlemen. This is a crucial moment here. We still have 11 minutes, and I'm going to see if the bulls are going to defend this particular line. And I'm saying if, because we really don't have a certainty. Only thing that we know that earlier I have drawn the line right here saying this is a line in the sand, this is a line in the sand, and this is a line in the sand. We need to see how this bar closes. Now, be aware of it. Right now, over here, it's 8:49. Within 1 minute, this bar is going to close And I would not be surprised if all of a sudden the buyers step in and we have a green bar up, green bar up, and a green bar up. Now, just think behind the scene. What do you think has taken place there? Stops were getting hit because that's the same place where the people usually place their stops. I'm sorry, I drew this line at the wrong place. Line was supposed to be drawn right here. This is the next level. So we're gonna see in 1 minute how this bar closes and where's the next one for me. Based on that decision, I'm going to decide maybe I can enhance my bull put by turning it into, Mark, here's the answer, iron condor on today, SPX, and on today, Russell 2000. So let's refresh the page. We're still going lower. We're still going lower. Well, let's go into the right mode, and that right mode is fix it. So we have the 25 and now it's only a little bit away. You see, 45 to 25, that's only 20 handles difference. What can we sell? Here is the beauty of it. If you would just look visually, you would be noticing this is screaming at you. 41,000 contracts. It's extremely safe and it brings additional 20 cents. I'm not going to even think twice. I'm going to just fire it in. I'm going to just fire it in. So now that I have fired it in, I might get 30 cents for it. Bingo! I got 30 cents for it. So now be aware of it. I have created an iron condor here on SPX. There's an iron condor right here. So I'm not going to hesitate here. I'm going to explain to you that that's the way to fix it. This is still going down. I'm going to be fixing it on the other one as well. Other one means in a different account. So in this IRA account where I'm more conservative, I'm a little bit safer because this blue line represents where my moderate trade is, and this is my conservative one. If I were about to place the same conservative one, do you see that the price has already increased? It's almost like a $1. 710 minus 610, it's a $1. I would be able to get the $1, but I originally got the what? 50 cents. That's why over here I can still place this one, or I can go, what's the next level? I can do it at 36.80. Please do not do that blindly. Please, please, please do me a favor. Go back to the chart. 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 So you got to look at the chart. So I'm going to move this out of the way, and I'm going to look at the S&P 500, and I'm going to see what is really taking place here. We are having this pullback, but where are the red UFOs? Well, maybe I can't find it on a 15. How about if I go smaller time frame? Well, now it's already, okay, 37. What is that? 30. That's way too high. That's way too high. I don't think we have anything nearby. 144. Can I find something? 36. No. That's 36.96 is where I did this one a minute ago. But I want something lower. Now there's two choices. I can hit the 36.80 or I can hit 36.90. But I want a chart to tell me. I don't want this to do blindly. I want a chart to tell me. I think I'm gonna go back to the 15-minute chart and just to see 36.80. I don't like it. It's like if we're gonna lift, we're gonna probably lift up to the gap, and the gap is right here. You know what? This would be nice compromise if I picked 36.85. Okay, 36.85 also needs to be supported with some activity. 36.85 has a 5,000. 36.80. You know what? I'm gonna go more conservative. I'm gonna pick 36.90. Now let me explain to you what I'm doing. I'm now in my IRA account. This is an account where I had a conservative trade for 50 cents. I want to now place this one at 36.90 because volume on today's activity is great. Now, if you really feel bold, you can do this one for 18,000. But what about if you turn around and go above that 36.50? Because didn't we already go 36.71? I mean, stop. I mean, just look at the number, okay? Just look at the number. Why would you want to place at the 36.50 a trade where we had already traveled through that trade? At that point, your mindset needs to be, we're definitely going down and we're never going to return. No, 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 no. Let's be conservative, because over here we already placed the conservative trade. I think, and let me maybe make this into yellow or orange or some other color just to stand out. I would feel more comfortable at 36.90, bringing in about additional 50 cents, okay? Because I'm selling this for $1.95. I'm buying this for $1.50. I will bring additional 50 cents. So in that case, my profitability will be good. Will be good. Okay, so what do? I click on the bid, because that's a bear call spread. I sell, and I sell vertical. Oh, come on now. 50 cents. Oh, come on. 45. Yeah, I'll take 45. Just give me anything at this point. I got filled on 45. So let me now show you what happened in this account. In this account, I was able to take in 45 cents and a 50 cent. So let's now explain what really happened. Rather than having 10% profitability on it, 10% would be $50 while risking $500, right? Well, now that's no longer the case. Now 95 risking 500. That's almost 20%. So I just jacked up my profitability by adding this one thing. Now be aware of it. Look at the chart. What needs to happen? We need to come down here, bounce, and then chop around for the rest of the day. We should not go down and take out the what? The low of the day. Then how do you protect yourself with it? Well, we really don't protect ourselves. We monitor it. We monitor it in such a way that right here where it's a low, we single right click and we create the alert. So when you create the alert, it's going to populate. You just need to change this to below and say like when we come to the 15 or 16, whatever number you want, like alert me. So then alert comes to your phone and then you're like, ooh, let's do something about it. Or if we rally up and go above the 36.90. So one more time, how do we do this? So we go where it says a high, create alert, jack it up to wherever your price is, which is at the 90. Send it in. Make sure your platform is connected with your cell phone and all this type of thing. So anyway, we have about 2 minutes left, and now just finish up what we are doing here, right? So we started the session by reviewing the two trades, right? So we had the trades on a Fed day. This was a Fed day. Remember, it was a huge move. And we looked at SPY. They worked out. Stern current market condition. We concluded after so many days down, we actually started bouncing. Maybe just before the end, I can show you one more pretty decent website that I like to go to. It's a stockcharts.com. So this stockcharts.com, if you type in SPX, it's gonna show you the chart of the S&P that has several moving averages on, right? So these are the 50-day moving average and the 200-day moving average, and it shows you in yellow what the current price is. So over here you can see way better where those June lows are and how we have pierced through those June lows with the conviction, and we are now trying to resolve whether or not we can close above it or below it, right? So be aware of it, that this is a free website. You get the delay data. It's nothing like a FinViz, but I found it's very helpful for a big picture. Very helpful for a big picture. So one more time, just before we finish up here, I'm gonna post the more conservative of the two trades, not this one for $80, but this one for $50 into the worksheet. And when we meet the next time, which obviously is the next month, we can reevaluate. Now be aware of it. When the market is on a rip, you do not add a bear call spread to it. The only reason why I have added the bear call spread to it, because we had the what? Significant weakness. And the significant weakness uh, was in the Dow, because Dow was in a positive, now it's in a negative. But when you look at the NASDAQ baby is still very, 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 very strong. As of now, you can even make an argument this is just a minor pullback. We came down here. This is a minor pullback. We can still go up. And what about if you take out this level of the 3670? That's why we didn't pick the 3670. One more time, just before I dismiss you, we pick something higher than the 3670. 3670 was a high. We picked the 3690. So it can take out this by about $20. When it takes it out by the $20, then I need to do something, and that's why I placed the alert. So thank you once again. I really enjoyed this session. Good to see you, Jeff, and I'll see you the next time. Make sure you stay hedged, and bye bye.